Hello and welcome to World Talks on TVP World. I'm your host, Piotr Bielski, and today I'm delighted to report to you from the European Financial Congress held in Sopot, a beautiful resort town in northern Poland along the Baltic Sea. Today we have a very special guest, Piotr Bielski, who is the head of economics at Erste Bank Poland. Mr. Bielski, it's a pleasure to have you here.
Good morning. Thank you for having me.
So we see, Piotr, that the European Bank for Reconstruction and Development just came out with their latest economic forecast for Poland, in which they call for GDP to rise 3.5% this year in 2026, which is in line with Poland's growth record last year. How would you assess the state of the Polish economy roughly halfway into 2026?
Well, actually, this recent forecast from EBRD is more or less in line with our forecast. We have just a couple of weeks ago reduced our GDP forecast for this year from 3.8 to 3.6. So it was not a major revision, but we have reacted, first of all, to the information about the first quarter GDP performance, which we already know. And we know that GDP growth in the first quarter of this year slowed to 3.5%. The reason for that was mainly severe winter in January, February. But we also see that the conflict in the Middle East is ongoing, and it started in March. Everyone is hoping that it will end relatively soon, but actually nobody knows how long it will last. And it creates at least some degree of uncertainty, some degree of some costs for businesses, for transport, for logistics. And because this is also one of the factors which makes us a bit more cautious about the near future. However, I think that a very positive factor which will be stabilizing GDP growth this year will be investment component, because it was the let's say hypothesis that we've held for at least 2 years, that 2026 will be the year of solid investment growth. Why? Mainly because this is the final period of when Poland and many other countries may utilize and spend money from the European Recovery and Resilience Facility, this post-pandemic huge package of money, which Poland is a big beneficiary. And the deadline to spend this money is actually in late 26. So we are actually entering the final phase of using this package of money, and actually those investments related to this kind of EU funds are pretty much immune, I would say, to what happens in the Middle East, because no matter what happens in Iran, we have those funds already in Poland, and we have to use it in full and use it effectively. So this is a big stabilizer. Of course, there is some degree of uncertainty how consumers will react to higher costs of fuels and higher uncertainty. But even in this respect, I think we have reasons to be relatively optimistic, because first of all, we've seen that the government was quite quick in offering the protection for households in the form of temporary tax reductions, and that mitigated to some extent the impact of higher fuel prices. And second, it looks like Polish consumers are still in relatively good moods. Of course, the consumer confidence has dropped a little bit after the conflict started, but now started recovering. We see lending growth, which is actually still accelerating. So Polish consumers are not afraid to take new loans, which also tells you something about their attitude. They spend money, and we think that Polish economy will be able to grow, maybe not close to 4, but let's say 3%, 3.6%, which still makes us a leader of growth in Europe this year, and probably next year will be a bit slower, but then not that much. Probably still close to 3% growth we'll be able to achieve.
So I understand from your commentary just now that the Polish economy has fared perhaps better than expected in light of the crisis going on in the Middle East, with, of course, the different government measures that came into force, because the EBRD had mentioned that higher energy costs could cause a slowdown in GDP growth next year. How concerned are you about the cost of energy and some of the other disruptions that are stemming from the Middle East crisis?
Well, Well, I am concerned in a sense that actually nobody knows what happens, when exactly this conflict ends. And it's like, not only our team, but I think most of economists make assumption which seems the most rational assumption. This war has to end relatively soon because in political terms it doesn't look rational to continue it too long from the US point of view, even from Iran point of view. So you make this assumption, and then if this is the baseline scenario, then you probably assume that there will be maybe not a super quick, but a gradual decline in energy costs. If this is the case, I think the Polish companies and also other like world economy should be able to cope with it. And that's why we are not revising the growth outlook dramatically for the next year. We still hope that we will be able to benefit from the fact that, for example, of course, there is this end of European post-pandemic fund grants taking place, but we still have post-pandemic loans, which will be used in a bit more longer period of time. We have the new facility, which is SAFE package, which is also a very big package of money, and Poland benefits from it a lot, which will be boosting investments. And in general, Poland has entered multi-year investment cycle, in my opinion, because it has no other option. Because, for example, we all know that the demographic outlook is not great for Poland, right? This is also something that we know for years, but it starts, companies start suffering from this factor more and more. Shortages of labor and increasing costs of labor are the growing problem for Polish companies. So everyone understands that Polish companies have to invest in more modern technologies, machinery, robotics, and this is taking place. We see it also as banks because we observe the big appetite for loans, not only from consumers but also from companies. Investment loans are accelerating, picking up. This is also a very positive feature, and it signals that we are at the beginning of investment trend which may last a little bit longer. So I'm not afraid about the growth outlook in our baseline scenario, which assumes relatively quick end of the war. But the problem is that nobody can be sure if this baseline scenario actually materializes. This is the biggest problem of economists right now, that nobody really knows how long this war will end, because we see declarations from the US side, from Iranian side even, that the talks are in progress. But actually, initially, everyone assumed that it will be several weeks. Now we are, 3 months into this war, and it still hasn't ended. We still hope it will end before the summer holidays, but if not, then things may get more complicated, because, I think this is a good analogy to the 2022 period when Russian invasion on Ukraine happened. And okay, there was some spike in energy costs, energy prices at the beginning, then the market has stabilized, and only somewhere in the middle of summer or maybe late summer, the market started worrying again. Why? Because everyone started thinking about the next winter, which will be coming. And this is more or less similar. For now, we still assume that it will be pretty much okay, and companies will be able to secure supplies of energy before the winter, because the war will end. If the war doesn't end by midsummer or late summer, I think worries about the energy, fuel security, gas security may start rising again. And in this scenario, probably we would be more afraid about the growth outlook, about inflation outlook. Again, not the baseline scenario for now, but if the war doesn't end in the next 2 or 3 or 4 weeks, that's the possibility.
So looking at the Polish economy from a broader Central European perspective and comparing the performance of the economy to its peers like the Czech Republic, Hungary, Romania, we see, if I could use an analogy of quadrants, where the Polish economy would be an example of an economy experiencing high growth, but at the same time high deficits. Then on the other side, or a similar angle in terms of the deficits, you have Romania, which has high deficits but also very low growth. Is there a risk of in the Polish economy, if deficits that continue to rise, that we could find ourselves in a situation akin to Romania, which for many years was experiencing high economic growth, but currently it faces the highest inflation rate in Europe and some of the highest deficits as well?
Well, I think definitely there is such risk. It's not the risk for the next year, not for this year, not for the next year, but and maybe not even for 2028. But considering, looking at our fiscal trajectory, and when we look at the fiscal deficits in the last few years, last year the fiscal deficit was around 7% of GDP. This year probably is going to be also close to 7% of GDP. And next year, honestly, I don't believe it can be significantly lower given that this is the election year. So we have, year by year, we have large fiscal deficits, and the result of it is the quickly increasing debt. And we have domestic regulations, the public finance law, which sets the ceiling for public debt at 55% of GDP. We have the constitution, which sets the ceiling at 60% of GDP. And regulations say that if we breach this limit, if we hit the limit, that limit, the government is actually forced to impose actions that will ensure that that is no longer growing. So what it means is that if we change nothing in our policies, at some point we may be forced to we'll be forced into a quite rapid fiscal consolidation. And actually the example of Romania is a good one, because that was what happened with Romania. They were also role model for economic growth. They used to be very quickly growing economy.
They were a tiger economy back in the days.
But at some point they were forced into a quick fiscal consolidation. But they were not forced by the legislation, but they were actually forced by the market. And again, in our case, we don't know what happens first. Either it will be consolidation forced by the market or by the legislation. The legislation can be always changed if the government, if there is such majority, for example, after the new election, it can be changed. But if it's not regulation, it can be the market reaction. So what I'm saying is that the trajectory that we are in, the fiscal trajectory, in my opinion, is unsustainable. At some point, the government has to do something about it. If it starts doing something about it earlier, maybe the adjustment will be a bit more gentle. But if we wait until the last second and it's a forced, quick fiscal consolidation, the macroeconomic results may be very let's say, unpleasant, because it would imply lower GDP growth. At the same time, probably higher prices, higher inflation, because part of the fiscal consolidation probably will have to be tax increases. And that's exactly the case of Romania.
Mr. Bielski, the head of economics at Erste Bank Poland, thank you so much for speaking with us.
Thank you very much.
I'm your host, Maciej Bilowski. You've been watching World Talks here on TVP World. Please stay tuned for more.